for any company that sells products, physical products, if you take a careful look at the correlation between sales, accounts receivables, and inventory, it's going to give you great insight into determining how the company is likely to perform going forward. Maybe it's in the next year or the next quarter, but you can see the historical performances based upon this analysis and how it actually affects stock prices. I've previously written a whole blog post on inventory analysis, and I've got the link further at the below here. So if you've got the spreadsheet, you can just follow this link and it'll go directly to the blog article where I specifically go into the details and how to go about analyze this in full. But by looking and breaking down inventory, instead of just relying on a single line item inventory number like this, which is what you're most likely used to getting, by looking at the subcomponents, all of these subcomponents, raw materials, work in progress, purchased components, finished goods, and other, you're getting a detailed breakdown, and it's giving you even more information and data on the fundamental operational and how well it's doing in those two aspects. Because one thing that inventories doesn't really tell you is it doesn't give you an idea of which parts of inventory is doing well. For example, inventory could go up 200% in 1 year. But if the majority of that 200% was mostly finished goods, then that's a problem. Whereas if the company is taking advantage of cheap raw materials at this time and is stocking up on that, then that's not really such a bad sign. It could be a sign that they're getting more orders, they have more backlogs, so they're preparing. You see how I've just divided up two scenarios. One where, if you just take a look at total inventories, you could be misled. But by breaking it down and getting all this information automatically, I'm able to see exactly the operation side of the business as well. Another thing you want to consider is that with inventory, it's also seasonal. There could be seasonal effects. So rather than just looking at fiscal comparisons, what you also want to do is look at quarterly over quarterly numbers. Let me just click this button to group it so that I get a better view. By looking at the quarterly over quarterly numbers, it's going to give you an even better idea of how the company is doing. The best case scenario is when there's growth in revenue and account receivables and inventory, they all go up together in sync. However, be careful if accounts receivables or inventories rise quicker than revenue. That's something you have to watch out for. For example, something like, let me see, in this Q1 in 2013, revenue for this quarter really only increased 14.4% from the prior quarter. But when you see here, works in progress, it's jumped by 194.5%. Now, don't jump to immediate conclusions yet, because when you look at the total number at the bottom, inventories total, this increase is not as big as this. So this isn't a big red flag. A quicker way that I've created this is to show you the graph. And by looking at the graph, let me just let me ungroup this so that you get a bigger view of the graph. Okay. Looking at these trends is important. You don't want one spiking up or down above and below the revenue line. The revenue line is always that frame of reference. And so everything that's consistent and in sync means that the company is doing well. And if you look up the historical story of Crocs, you would know that they really ramped up inventory and they just got so much excess that it really brought the company down. And that's what this 2008 and 2007 number really represents. You can see this is in the chart. And since then, they've done a really good job, and the stock price has awarded them for it. So that's a quick overview of this inventory analysis. Do make use of it again, and it's a very powerful way to get deeper insight into the operations of a business, something that most people and most other tools will not give you. Thanks for watching that video. Now click on that red subscribe button so that you get more tutorials and value investing stock analysis. And if you haven't done so, make sure you subscribe to the blog. I'll also throw in some free set of investing spreadsheets so that you can use it to value and analyze stocks. And finally, you can go to the YouTube channel now and view the other video tutorials that I have up. I hope you find it useful and hope to see you around.